Hi, hello everyone, and good morning, good evening to wherever you're listening from. This is Spaces with Kalu. Thank you for joining. Great show we have this Saturday for you guys. We always talk here money, finance, economy, and we always have this slant. How can what we talk about make you a better investor? Learn about your money. How can you get around the economy of Nigeria, of Africa, of the world, right? So this week we're talking commodities, right? We've done equity, we've done fixed income, we've done currencies, we've done real estate. We want to talk about commodities, right? And we have a great guest here that's going to help us to shed light on this entire commodities space. So we have ComX by Afex, right? So these guys are like your commodities plug, more or less. And they are the one player in that commodity space. So I'm not going to get into definition. I'm going to let them do all that talking. But I think I have Yusuf with us here. That's Mr. Yusuf Ogunbiyi, and he is from ComX by Apex. So I just have a few questions for him, and as usual, we're going to talk, understand what's going on in that space, how can it benefit us, and then of course at the end, you guys can come in and ask your questions, and then we can all learn together. We've got Obiano Ju also here co-hosting with me. So if you want to speak to me, or you can just send her a DM if you want to talk, or just maybe just call her and then she can set you up as a speaker and all that. So don't be shy about speaking. Yusuf, I don't know if you are online and you can unmute and say hi.
Hi everyone, good evening. Here. It's nice to join you guys discussing commodities today. It promised to be an interesting session.
Excellent, I agree, Yusuf, I agree. So let's just get right into it. Maybe you can just introduce ComX to us before we can talk about commodities. What is ComX? What is Afex? What are you guys all about?
Yeah, thank you, Kalu. So like Kalu said, my name is Yusuf. I work at FX Commodities Exchange. So ComX is a platform that allows you to trade commodities in Nigeria, in Naira as well. It allows you to trade commodities, it exposes you to a number of instruments across the variable income and fixed income categories. So these instruments allow you to earn from the commodities market. A number of opportunities are found in this space, looking at the way the commodities market has played out to be over the last more than 10 years now. So just basically ComX is a platform that allows you to trade commodities, and a number of commodities are on this platform, majorly agricultural commodities, but then looking at the trajectory that we have set for ourselves, we are looking at expanding that into precious metals, energy commodities moving forward. So that's pretty much what ComX is as of now.
Okay, so ComX is a platform, right? So we get that, right? So what are commodities? Walk me through commodities as like a 5-year-old, right? So what are commodities? How are they different from stocks? And what are the examples of commodities in Nigeria I can invest in, if you don't mind?
Okay, fantastic. So just this evening I ate jollof rice, chicken, and a bottle of that's how I like that in a bottle, the small bottle.
You're a big boy.
Thank you. It's just to calm the nerves down after the whole fasting for the whole day. So my plate of jollof rice is basically paddy rice. My chicken is basically maize and soybeans, and the bottle of Five Alive is basically orange.
Interesting.
Pretty much.
Interesting.
So if I can extend that in this, if I were to have replaced that bottle of Five Alive Poppy with Maltina or Malta Guinness, I would have said that bottle of Malta Guinness is sorghum, right, to a large extent. So that means that commodities are items that are used in producing other items that we consume every day. And the interesting thing is that every one of us is involved in utilizing these commodities on a daily basis at every point in time. The moment you pick your laptop, you are basically picking The moment
Interesting.
you drive your car, you are driving aluminium, you are driving metals, you are driving crude oil, you have lithium in your battery, you have some lithium in the semiconductor of your car, especially if it's a very, very recent model. So commodities are items, they are raw materials they are used in producing everyday item that we utilize. So, but then on a broad level, commodities are divided into four classes. So you have the hard commodities, which is our aluminium, our steel, our iron, and then we have the soft commodities, which are cocoa, ginger, agricultural commodities generally. Then you have precious metals. You have your gold, silver, platinum, diamond. Those are precious metals. And then you have precious commodities rather. And then you have energy commodities, which is what Nigeria has basically lived on over the last 40, 50 years, which is crude oil, natural gas, coal, and a broad variety of other commodities. So these are the four broad classes of commodities. In Nigeria as of today, investing in commodities, as we've had it, so FX Commodities Exchange is the first private commodities exchange in Nigeria and one of the very few ones that are operational. And as of now, we have about 8 commodities that are actively traded on the exchange. So you have maize, soybeans, paddy rice, sorghum, and then you have export commodities such as cocoa, ginger, cashew, and sesame. These 8 commodities are traded on the exchange as of today. Like I said, we are looking at introducing precious metals like gold, energy commodities like probably LNG moving forward. And that's the one. So those are the kind of commodities that you can trade as of now, the 8 that I mentioned earlier. And the interesting thing is that because we all utilize commodities every now and then in our everyday activities, it's tied to everything we do. So whenever you see people spending so much money in buying cars, they are basically buying commodities.
Interesting.
Some months ago, the MBS released the expenditure data for Nigeria, and we were able to realize that about 53% of the annual expenditure of an average household in Nigeria is spent on food. So that means an average household in Nigeria spends 53% of their income on commodities that are consumed every day. So that shows you that there's a very deep, liquid, solid market in that regard. And our job as an exchange is to bring instruments that leverage on all these commodities, bring it to the awareness of investors, and make sure that they are able to take advantage of the commodities market as well.
Yeah, I like how you basically lay this out. I would never have thought about when I'm eating rice and drinking malt. I would rice, yes, paddy rice, but malt with the sorghum and driving the cars, the nickel and all those metals. I like how you lay that out. So essentially, when I'm just spending my money and all that, flying on a plane, doing all that, I'm actually trading in commodities, but I'm not actually trading. I'm buying and selling, but I'm not actually doing the trading more or less.
Yeah, basically, that's pretty much what we are doing. I guess for a few of us that fly, that take the planes, that use the airports, the airlines, thereabouts, you must have experienced the surge in the cost of flights in the past few months. And that's basically because jet fuel, which is what the aeroplanes fly on, what they use, the energy source that they utilize, has gone up significantly over the past few months and running into a year now. So you can then imagine that because you typically spend 30, 35, 40,000 naira to get a flight ticket before, now you have to spend almost 53, 55 in some instances, and if you are very late, you can spend as much as 80, 94 as I've spent in some instances. So this is telling us that at every point in time, when these commodities are going up, you feel it as an individual. You spend more money to acquire the same items that you utilize. So the advantages that investing in commodities bring, just to mention a few of them quickly, is that because commodities, and I saw Kalu post something, I think it was today, it was like Bitcoin down, stocks down, inflation up. So that's the correlation, right?
Yeah.
So interestingly, commodities give you an almost one-to-one relationship with
Interesting.
The inflationary trend we've seen over the last 2 years globally, whether it's caused by the COVID-19 supply chain issues, whether it's caused by the energy issues, all of these are transferred to commodities. And some of the most successful portfolio managers over these past 2 years as well have been portfolio managers that have hedged their position in commodities. Mm-hmm. So if you were to be playing in commodities over the last 2-3 years, you would have made fantastic returns, even though you are paying a bit more for it from your pocket during this servicing. You are able to balance that by also gaining so much money on your investment. So you are able to counter the inflationary effect using commodities very effectively.
Okay.
For countries like
so Yusuf, I want to cut in there. So is this correlation, what you're basically saying is that when we said the stock market went down yesterday, Bitcoin also went down yesterday. I mean, yesterday was a bloodbath for markets. So are you saying that commodities then are not correlated to, say, the stock market and to Bitcoin? They're like negatively correlated, meaning that if stock markets and Bitcoin go down, commodities don't go down?
No. So the relationship is with inflation, rather.
With inflation, okay.
Demand and supply fundamentals are the most important fundamentals when looking at the commodities market. So anytime we're in a deficit situation, commodity prices will rally. No choice. Anytime we're in a surplus situation, commodity prices will tank. And that's the basic fundamental that we typically look at.
Interesting.
If you then extend it a bit, so when inflationary pressures begin to build up, especially when those inflationary pressures are not just coming, when those inflationary pressures are coming from whether there's so much money in the market chasing fewer goods, or when there's inflationary pressures as a result of massive expansion in the economy, commodities are always benefiting in those instances. So think of it in the last 3, 4, 5 months now. Central banks globally have been saying that they would like to clamp down on inflation.
Yeah.
They will raise rates, blah, 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 and all of these conversations. One of the things that benefits in this kind of market is gold. So look at the price of gold as it has rallied over the last 6 months, if I'm not mistaken. And gold is a commodity. So whenever anybody feels like there's inflationary pressure and the value of their wealth might reduce, people just transfer to other precious metals like gold, and they hedge their position in that regard, and they typically enjoy that benefit.
Okay.
Also, just one more thing before we jump off this. So the basic thing is that inflation and inflationary pressures, inflation numbers rather, are positively correlated with commodity prices. So when inflation is going up, one of the best bets you can have is to position yourself in a very valuable commodity.
I hear you. And so it's the driver is inflation, right? And if inflation in Nigeria, of course, we're talking about give or take 15%. Food inflation is higher. So that then correlates to the fact that if there's high inflation in Nigeria, then commodities, following your example, will be the asset class to basically take a look at to ameliorate that inflationary pressure, right?
You're absolutely correct. So inflation in Nigeria is close to 20%, if not a bit higher. And then over the last 3 years that we've seen these inflationary pressures build up, commodity prices have consistently outperformed inflationary pressures by nothing less than almost 20% differential between inflation and the returns on commodities. So on the average, over the last 4 years, based on the data we track on a day-to-day basis, commodities have done like 32-33% returns, annual returns over the last 4 years. I don't think inflation.
Say that again, please. Say that again, please.
Yeah, I said commodities returns have averaged around 32-33% over the last 4 years. Inflation, I think the maximum we saw for inflation at some point was about 18.72, if I'm not mistaken.
Excellent.
So that means that if you were positioned in commodities on a broad-based level, just like the S&P 500, if you had bought a broad-based index like our HS commodities index, you would have at least a 40%
makes sense. I like that point. That's why I need to repeat it again. That in Nigeria, where we have inflation going up, where fixed income, we're talking about bonds, treasury bills, even bank deposits are not keeping pace with inflation. So if you have money in the bank, you're not keeping pace with inflation. Of course, shares, we know, yes, shares may keep pace with inflation, but they are risky, right? That this is just one avenue that we haven't really been looking at, that commodities, buying paddy and cocoa, could then give us that hedge against inflation. So my next question, Yusuf, is how does COMEX do this commodity trading, and how can I? So I'm an individual. I want to invest in rice and I want to invest in cocoa. I don't know anything about the farm. How can I get in? What's the minimum? So walk me through step one, step two, step three. Tell me how you guys do it and how I can then do it. Step one, step two, step three. How much do I need? Do I need a phone? Do I need a broker? How does it work?
So first of all, I need to mention that we are an exchange, the Commodities Exchange licensed by the Securities and Exchange Commission in Nigeria. So our primary job is to design investable instruments that would allow investments to make some money from this market. That's the primary job. By extension, because we are regulated as an exchange, an extension of that function is to say we are mandated and obliged to design instruments that wouldn't rip investors off. So any instrument we are designing is clear as to how that instrument behaves, the dynamic of that instrument. Any instrument we are designing, it's clear the risks you are taking in that instrument and the rewards that you can benefit from it. So before you dive into it, you're able to weigh the risk and reward on a very, very clear basis, right? So that's one thing I need us to also understand. So one thing we've done very creatively is to say, can you hear me?
Yes, I can hear you perfectly, yes.
Oh, okay, nice. So one thing we've done, and it's been quite an innovation that we've brought into the market, is to say, when you have a bag of maize, just think of a bag of maize. What you do with a bag of maize is to say, a trader goes to the market and they buy that bag of maize, keep it in the warehouse, and at some point in time they sell it off, whether they sell on a day-to-day basis or they sell at intervals on a monthly, quarterly basis.
Yeah.
But one thing is clear. That bag of maize has an economic value. That's the first thing that is clear. The extension of that is that if you are able to standardize the quality of that bag of maize, which an exchange is supposed to do, you can actually securitize that bag of maize and sell to investors, and investors will be able to benefit from the rally in price.
So I want you to say this again, but I want to say it in a way that, so what you're essentially saying is that a bag of rice in a farm in, say, Kebbi, you want to take that bag of rice and make it, should we say, investable by someone that is not in a Kebbi farm. Okay.
Okay. You're absolutely correct.
Okay.
So what I've basically said is that you sitting in Abuja or you sitting in Lagos, Port Harcourt, in Lorry, wherever you are able to invest against commodities which typically you would not have been able to have access to from the get-go. So the structure the exchange has provided is that leveraging on all the warehouse network, and that's about 103 of them in the country as it stands now.
103. Wow, that's a lot.
Yeah. 103 as it stands now. So looking at that number, looking at that structure, what you're able to do is that an introducing broker is able to bring in the commodity into the warehouse, standardized, everything is clear, this is the quality of the commodity, and on the back of that commodity kept in the warehouse, which is constantly kept safe by a collateral manager that is tied to the exchange. The introducing broker is then able to introduce an investable instrument on the exchange that investors can just go on the exchange and buy from. So for an investor to then get onto the exchange and buy that instrument, what they will then do is, like in this case, just download COMEX by FX from Apple, Google Play Store. You can also do that on web, comex.fxmedia.com. Go to that platform, register on the platform, put in all the required information. I think in about 3 steps, you should have completed your right?
Mm-hmm.
So once the investor completes the onboarding process, the investor is able to see the array of investable instruments available on the exchange at every point in time. Just like you would typically download your trading app from any exchange, from any platform that you have, you'll be able to see all the products available on the platform, the prices that the people have put them up for sale, or the prices some other people have put them up to be bought, right? So you're able to see the order book, as we call it in the common trading parlance.
So this is like stockbroking. Like I can go in and I can see the buy orders, sell orders, prices, and all that. Like normal.
Absolutely.
Okay.
It's just like a normal trading platform. So at any point in time, you click on the instrument, you look at the price. If you like that price and you think the price is good enough for you, you then match that price. So you click to sell. If it's a buy order, you click to sell to that price, and if it's a sell order, which in this case I guess a new investor will be buying. So a new investor wants to buy. So the new investor will be matching a sell order. You click on the sell order, you put your quantity you want to buy, the price comes up, you put your price. Obviously, you would have funded your wallet initially, and all of these processes are on the platform, so you're able to walk through the process. And it's quite an intuitive platform that you can just go online, download and utilize, right? So once you're able to buy the instruments, the interesting thing is that with as little as I think about 200, 250, 300 naira now, you can actually buy an instrument on the exchange.
How much again? Turn naira? How much did you say?
With as little as 250 naira, you can actually buy an instrument on the exchange.
Who is the seller? Is the seller the farmer or is the seller Comex? So if I have my bag of maize in Katsina, am I the seller or is it a warehouse that I take the bag of maize that I weighs it? Who is the seller in this case now?
So like I said, this is what you're buying on the platform is not the bag of maize, but security and instrument that has been created on the back of that bag of maize.
Okay. So I'm trying to tie it in. So the farmer in Katsina takes his bag of maize to the warehouse. It is weighed, sorted, and standardized, right? Then Comex, who creates that instrument that is securitized by that bag of maize in Katsina, right?
Yeah, basically.
So who owns that security? Is it the farmer or who owns that security that has been created now?
Of course, the farmer has sold the bag of maize technically.
Okay, gotcha.
The farmer has sold the bag of maize. The farmer does not have claim to that bag of maize again.
Gotcha.
So what the investor on this side is also buying is also a cash settled instrument. So the investor as well is not saying that, if I buy 10 units of this instrument now, I will then go to the warehouse and go and collect like 10 kg or 20 kg, depending on the size of that contract. No, what the investor is saying is that I want to buy an instrument that at any point in time I can sell off and collect my money.
Okay, I get you now. So in this instance, the farmers get their cash, they are happy. So you guys are actually funding and creating cash flow in those farms across Nigeria.
So like every exchange, the exchange has designed structures that would make sure that there are different participants that are playing their role to ensure that the farmer on the one hand gets the commodity sold and gets his or her money, and the investor on the other hand is able to buy the cash settled instrument that they would be able to buy and sell. Between the investor and the farmer, there are participants on the exchange that are registered and duly recognized by the commission, the Security and Exchange Commission in this case. And those are the participants that are mandated to carry out their functions to ensure that this market is seamless and efficient.
I love it. Yeah.
On the one hand is to create, so this kind of instrument now is a variable income instrument. What that means is that if you buy at 100 naira today, that instrument can go as high as we've seen in many instances, go as high as 150 naira, 160 naira. You sell your instrument and you make about 50-60% in that case. Or in some other instances, that instrument can go as high as 118 naira, so you make about 18%, 20%.
Yusuf, I think you broke up a bit. Okay, Yusuf, I can't hear you, so I'm just going to stop him. Obi, can you hear Yusuf?
No, I can't.
Yeah, he was flowing. So I mean, I was loving. Yusuf, when you come back, I'm just going to hold forth for you till you come back in. So,
in the remaining 8 years,
Yusuf,
that amount of money
Yusuf.
by investing in an instrument like maize. So what variable income means is that as the price can go up, so can it also come down and the price you purchase it. So, but then we are always in the market providing information to investors as to the price levels of these commodities and what we think the market is doing. As an
I'm going to send him a DM. Yeah, Yusuf, I think your connection is a bit weak. Let me send you a DM. I can hear you. Your connection broke up a bit, so I don't think we lost you. If you could go back to the point that you were making, right? We lost you and you came back in, but I don't think you knew that we lost you. So if you could like maybe back up and just make that point again, so we just follow. Thank you so much.
That's great. So I was saying that so the instrument I described earlier is a variable income instrument. So that means that you can go on the platform, buy that instrument, and the price can go as high as 150, 160 naira. And that's assuming that you invested 100 naira, for instance. So you can make about 50, 60% in some instances. In some other instances, you can make about 10, 18% in very rare instances.
Yeah.
And even more rare instances, can you lose money? So you can also lose money, but that's quite rare based on the market fundamentals that we have currently. So we have situations where investors put in their money in a variable income instrument and they gain significant returns. In some other instances, they gain moderate returns. And moderate returns in this market is like 20%. And in some other instances, they lose a bit of money, say like 10, 12% or thereabouts.
So in fact, there's no guarantees. Like buying equities, like there's a risk factor there. You are buying a commodity that goes up and down in price.
Absolutely.
Excellent.
We also provide all this information. So on a daily basis, there's release of price information on the exchange. On a weekly basis, there's weekly reports that are shared with the investors. On a monthly basis, there's monthly reports that are shared with investors. We are always on channels every week to discuss the market, to tell investors what the market looks like.
Yeah, I just started to make sure I listen to you guys. Yusuf, can you hear me? I just started to make sure I listen to you guys because I want to make sure I got the commodity prices. Since we've had the issue in the Ukraine, I've seen that the maize prices on the Chicago Mercantile Exchange has gone up in price, and that is driving inflation all across Europe. And I have been worried that the maize prices will then cause what we call imported inflation into Nigeria. So I've been really watching that as a driver of inflation in Nigeria because Ukraine and Russia are one of the biggest exporters of maize to Africa. Same thing with fertilizer. We're thankful for Dangote fertilizer came at the right time, the urea fertilizer, so we don't have to import our fertilizer anymore. But still, that's a big, should we say, risk, monetary risk to any economy that you're going to be importing what is no longer available. So I don't know if you're back. I think your audio or your connection is going up and on. I really had a lot of questions to ask you. So, maybe we can just take folks to ask questions while we wait for Yusuf. I have a question here already from him for someone to ask him. I wish he comes back so that I can take it up. Yeah, I think he has issues with his connection. So guys, we're talking to Yusuf of Afex, and we're trying to understand the commodity space in Nigeria. I mean, Yusuf is saying you can open an account with about 250 naira, and he did give me a list of commodities that they trade, from maize, soybeans, and paddy rice to the export crops of, say, cocoa, ginger, and sesame. And in case you guys don't know, right, Nigeria's biggest export, of course, is crude oil. Our biggest export is crude oil. But the second biggest export that Nigeria has, of course, is cocoa, right? So, Obi, can you hear me? Hello? Hello? Hey guys, can you guys hear me? I might have to shut this and just do a reaching. I think maybe we lost connection. Give me a second, guys.